In this video, we are going to be looking at the November 2023 paper 1, and we are going to be focusing specifically on question 1, which is about the statement of comprehensive income. This question is also an integrated question, meaning there are two topics that are combined into this one question, and the other topic is inventory systems, particularly the first in, first out method. Today with us we have the information of Butle Limited. The information relates to financial year ended 28 February 2023. The business sells bicycle. Now in this question we are going to particularly focus on 1.1 and 1.2. 1.1 is the calculation of closing stock using the first in, first out method. We need that in particular because it's going to help us determine if we have a trading stock deficit or a trading stock surplus, which is part of our statement of comprehensive income. And in 1.2, we are now going to be dealing with that statement of comprehensive income, and we will leave 1.3, which is the statement of financial position, for the next video. So now the required for 1.1 wants us to refer to information B, Roman figure 2, and calculate the value of closing stock of bicycles using the first in, first out method. Now let's look at our information B. The following information was obtained after a physical stock count. The first in, first out method, FIFO method, is used to value the stock of bicycles. We have purchases for the year that were as follows. They have given you a table that shows you the purchases for June, September, and January. And then beneath the table, we have a note. Bullet 1 says there were 1,009 bicycles on hand on 28 February 2023. Bullet 2, 40 bicycles purchased in January 2023 were returned to the supplier due to factory faults identified. Bullet 3, a number of bicycles were stolen and must be recorded as a loss. When we deal with the first in, first out method, we work from the bottom up. It means that when we're calculating our closing stock, we are going to consider the stock that was purchased last. Why? Because this method simply says that what was purchased first would be sold first. So our closing stock would be the things that were purchased last. It means that everything that was sold first, like your opening stock, would have been already sold by the time we get to a point of wanting to calculate our closing stock. So our closing stock, because it's the stock at the end, the stock that is on hand, the stock that we are carrying over to the next year, it means that this stock will be everything that was purchased last. So now when we look at what was purchased last, we are going to combine it until it gives us a total of 1,009, because that's what our closing stock is. Now you will notice that in January 2023, that was the stock that was purchased last. So to calculate our closing stock, we will have to start with that stock. That stock, it was 740 units, and we are told in bullet 2 in the note below that 40 of this 704 was faulty and had to be returned to the supplier. So which means that in actual fact, what we purchased in January was only 700 units. And now that we know we purchased 700 units, we can now multiply it with the price per unit, which is 2,100. And that will now give us 1,470,000. This is the stock that we purchased in January, and this is what will be left. Now remember, they said our closing stock in units, it has to be 1,009 units. So far we have only dealt with 700. So we need to know how much out of the September 2022 stock are we having as part of our closing stock of 1,009. So the simplest way to get that number is to take the closing stock that we know we have and minus the stock that I have already dealt with. I have already dealt with this closing stock, so I'm going to take it out of my 1,009, and in that way I will be left with 309 units. 309 units will be taken out of the stock that was purchased in September 2022. Now, how do I know that I can take it out of that stock? You will see the number of units in that stock is 2,215. So that is enough for me to get 309 in full out of that stock. Now, if it wasn't enough, then I would have had to go and get my balance out of the June 2022 stock. But in this case, it is enough. there is enough inside of 2,215 for me to be able to get 309. So I'm getting it out of the stock that is purchased in September. That stock was purchased at a unit price of 2,020, and that gives me 624,180. Now in my answer book, I'm going to go and transfer these two amounts and then add them from there and get my final answer. Now that I have figured out my calculations, I know that from the January 2023 stock, I have 1,470,000 that I'm going to plus with the stock from September 2022, which gave me a total of 624,180. I'm going to plus those two amounts together, and it gives me in my answer section 2,094,180. In case you were wondering, what does this whole calculation have to do with our statement of comprehensive income? I mean, they put it first before we do the statement of comprehensive income, which normally means if a situation is like this, that what we find here will in some way affect what we are going to be feeling in our statement of comprehensive income. In this scenario, instead of them giving us what this physical stock count is in the adjustment as part of our information, they gave us information about closing stock so that we calculate that closing stock ourselves and then go back to information A and find trading stock and try to compare it to it. Now, if this final answer, which is our correct closing stock, is bigger than the amount that is given to us as trading stock in information A, which is our extract from the balance and totals from the records on 28 February 2023. If this amount is the amount that is bigger, then it means that we have more stock than we thought we had, which means we have an opportunity to make more money than we thought we had. And that would mean the whole scenario will result in us having what we call a trading stock surplus. A trading stock surplus is recorded in other income. So it means that we are now going to record a trading stock surplus and put it here. That is if this amount is bigger than the amount that is given to us in information A. Now, obviously, in this scenario, when you go to your information A, you will see that the stock there, the trading stock there is 2,125,330. Now, that simply says that that amount is actually bigger than this one, which means this one is the smaller one. When this is the smaller one, meaning our actual stock on hand is the smaller amount, it means that we are now going to make less money than we thought we would be making. And because we will be making less money, that puts us in a position of a deficit. And because it is a deficit, it means now that instead of recording it in other income, it means now we are going to record that amount in operating expenses. Now we will get to record that when we come to our expenses. Now let's go on and go fill our statement of comprehensive income from the beginning. But keep in mind that we have already dealt with an information that has to do with our trading stock, and we already know that this thing will lead to what we call a trading stock deficit. Why deficit? Because this amount is smaller than the one that is in our information A. Now we are in our statement of comprehensive income, and we have been given our sales amount. It has already been entered for us as 21,017,200. We are going to use that to figure our cost of sales because our cost of sales hasn't been given to us. Instead, we have been given information B, a Roman figure 1, as an information that will help us calculate our cost of sales. Hence, we are getting ready to do a calculation. Now, there is a formula that we use to calculate cost of sales. If you didn't know it, be sure to write it down. Cost of sales is equals to a sales amount multiplied by 100 all over 100 plus markup percentage. So why 100? 100, we are saying that cost of sales is represented by 100%. This is the amount that I purchased my stock with. I'm saying that I'm purchasing my stock at 100%, and in order for me to make a profit, I need to make sure that I sell them at this 100% plus a markup. This is a formula that we like very much in accounting, and it is called the unknown over the known, meaning I'm going to multiply with what I'm looking for over what I have. Now, what does this mean in this scenario? What I'm looking for is 100, meaning it's the cost of sales. 100 represents cost of sales. I've already explained. It is the amount that I purchased with. So that's my unknown. I don't know what my cost of sales is, but what I do know is my sales, because I would have already written it here. So now we are going to plug into our formula and be sure to get our cost of sales. Now we are going to start with our sales amount, 21,000 and 17,200. Now, in our information, we are being made to know that this sales amount is actually the amount after discounts. Now, when you're doing an accounting, you're not going to count your discounts. You're not going to count your discounts for the sake of your books. You have to bring back those discounts because they're coming out of your pocket as the business, even though you gave them to your customers. For your customers, it was free, but to you, it wasn't free. So you have to account for those, otherwise your books will not balance. Now, our information B, Roman figure 1, reads as follows. The business uses a markup of 120 on cost of bicycles. Now that is relevant information because we will need to know how much we are putting here. And then it says trade discounts totaling 336,000 have been granted and recorded, meaning when they're saying it's recorded, it means that we can safely assume that they took it out of this 21 million. So we need to go back and add it back so that our sales amount can be complete. So we are adding back the 336,000, and then we can go ahead and multiply by our 100% over 100 plus markup. How much is our markup? They told us is 120. 21,353,200 is what we get when we add these two amounts together, and then we are going to multiply by our 100 over 100 plus 120 gives us 222, and our final answer for cost of sales is 9,706,000. Now what is left is for us to transfer into our answer book. So that amount that we got after adding the two amounts together was 21,353,200 multiplied by 100 over 220, and it gave us 9,706,000. Now you will notice that the first thing I did was to automatically remember to put this amount in bracket, because your cost of sales must be in bracket. Even in questions where they have already entered a cost of sales for you and they didn't put in a bracket for you, your job there is just to go there and put the bracket, because you without the bracket it shows that you don't understand what you are doing. For you to be able to get that operational mark, even if this amount was wrong, is for you to put this amount in bracket to show that you know that it needs to be subtracted. And why do you need that information? Is because how then are you going to calculate your gross profit if you don't know that we are subtracting this money? Because gross profit is your sales amount minus your cost of sales. So putting in bracket means that you understand this operation, and so you're going to take your sales amount and minus your cost of sales in order to get your gross profit. 11,311,200 will then be your gross profit after you have taken your sales and subtracted your cost of sales. Now we can now safely move on to our other incomes. The easiest way to make sure that you covered all of your line items is to always use your information A in order to see that everything that appears there, you have already started with that one and recorded everything there first. Now you will see in your information A that right after cost of sales, they now get into commission income, which is part of our other income. And since we are calculating our other income, it only makes perfect sense that we start with our commission income. Now information A shows us that commission income at 277,000, and in information B they give us an adjustment. So the adjustment in information B, which is Roman figure 3, says commission income 41,000 is owed to the business, meaning that this is an accrued income. It is still coming, so we need to add it. We are going to add 41,000 because we are expecting it to come, and then that will give us our final answer that we transfer into our statement of comprehensive income. So in our answer book we will say 277,000 plus 41,000 will give us a final answer of 318,000 as our commission income. Moving on to our next line item, which is fee income. It is right under commission income in that information given to us. It has quite a bit of a calculation, so let's go to our calculation sheet. Our fee income is given to us in information A as 303,000, and we are given an adjustment in information B, Roman figure 4. It says fee income includes 47,150 for February and March 2023. Note, fee income increased by 5% on 1 March 2023. So this means that our fee income has been paid in advance, because if it includes the March amount, March belongs to the next financial year. Remember, our year ends on 28 February 2023. So that means that that March figure needs to be subtracted out of this 303. Now, how are we going to find that figure that needs to be subtracted? It means we are now going to deal with the amount that was given to us in the information, which is 47,150. This amount is for February and March. Now, it says in the note there that in March, the fee was increased by 5%. So we can say, when we are putting it in percentage terms, that in February, the fee was 100%. But in March, the fee was 105%. Why? Because of that increase in 5%. You can safely assume that we are starting from a point of 100. It's like when we were doing our cost of sales formula. Our cost of sales, that's the amount that we start with, so we call it 100. So any amount that we pay or that we receive, any amount that is an initial amount, basically amount that we start with, it's our starting point, we call that our 100%. And when they increase, we are going to say that now we are adding the increment into our original amount, which is the 100%. 100% is the original. So we are now going to go back to that formula that we like, that says unknown over the known in terms of percentages. Remember, these are percentages. So the percentage that basically unknown over unknown is what I'm looking for over what I have. What I'm looking for over what I have. What I'm looking for is the amount for March. We have already established that if February was 100%, then it means March was 105%. So it means that what I'm looking for is the 105%. Why am I saying that? Because I'm looking for that amount of March so that I can subtract it. Remember, I need to subtract it because it doesn't belong to this year. So my only concern here is not to figure out how much was February, how much was this commission before an increase. Mine is just to know how much do I need to subtract. What I do need to subtract, which is my only concern, is the March amount, which is represented by 105. Now, what do I have? I have with me here, this amount represents February and March. February was 100 and March is 105. When you add them together, 100 plus 105, it will give me 205. So my unknown over known. What I'm looking for over what I have. What I have is the amount for both months. Then both months are represented by 100 for February and 105 for March, and they're added together there. So that means that the amount that I am subtracting is, when you punch this whole thing into your calculator, it should give you 24,150. So then we are going to transfer this into our answer book. Now we have transferred the 303, which we got in information A, and 24,150, which we have just calculated using our unknown over known method, and our final answer is 278,850. And now we are going to our operating expenses, and the first expense, before we forget, is that trading stock deficit we started by calculating with in 1.1. That trading stock deficit, in order for us to get our deficit, we are going to first start by entering the amount that is given to us in information A, 2,125,380, and we are going to minus the amount that we calculated in our 1.1, which was 2,094,180. And that will give us a total of trading stock deficit of 31,200. Now we can move on to the next item, which follows in our information A, and that is our rent expense. Rent in our information A is a question mark, which means we are going to figure it out from the beginning, and we are going to use our information B adjustments in order to do so. We are on adjustment Roman figure 5. It says Butle Ltd rents 150 square meters of space from prime storage at a monthly amount of 330 rands per square meter from 1 May 2022. The company increased the space rented by 25 square meters on 1 November 2022. Rent was paid until 30 April 2023. So if we paid rent up until 30 April 2023, it means that we have paid our rent 2 months in advance. It means that we will have to start calculating our total figure for rent, and then out of that total figure we will need to subtract 2 months worth of rent, which is March and April, because they do not belong to this financial year. Our financial year ends on 28 February 2023. So we are going to first start by calculating our rent before the increase. So our rent, before we increased the square spaces that we are renting out, we initially started by renting out 150 square meters, and we paid 330,000 for them, which gives us a total of 49,500 if you punch it in your calculator. Now we need to figure out how many months did we rent out at this particular price before we increased. Now they say that the increase was on 1 November 2022. So that means you are starting to count from 1 May 2022 to 1 November 2022. So you will count with your fingers. Don't have shame about it. May, June, July, August, September, October. I'm going to end in October because the rent was increased on the 1st of November, so I cannot count November. So that means I paid this amount for a total of 6 months, so which means in full that amount is 297,000. Now for the rest of the year, I'm going to have to calculate it at an increased amount. Now they only told me that they increased it by 25,000 square meters, so I'm just going to calculate that 25 square meters using the amount, because the amount didn't change. We are still paying 330,000 per square meter. So that means the amount that we paid for an increase for the rest of those months, meaning for the rest of the remaining months, would be an increased amount which we are calculating here, and then that amount will be added to our initial amount, and that will give us a total amount that we've been paying for the remainder of our financial year. So now this increase itself, not including the original amount, will give me a total of 8,250. Now that to 8,250 is just an increase. I have not really included in it the amount that was increased to it, which is the amount that I paid before my increase, which is 49,500. So this means that after my rent, I increased it with 25 square meters. The total amount that I have been paying for per month was now increased to 57,750. This is what I was paying per month after increase. This is what I was paying per month before increase. This is what I was paying per month now after increase. Now, how many months did I pay this particular amount? I paid it for 6 months. 6 months. I'm counting from 1 November to 30 April 2023. So November, I'm starting with the month of November because it was on the 1st of November, so it must be included in the calculation. November, December, January, February, March, April. I'm counting it now because look at the day. The day is 30th of April, so we are counting the month of April as well. So that means now in total for this 6 months, I paid 346,500. Now, I can now use this two amounts to determine my total rent. So the total rent that I paid, including the 2 months that I paid in advance, this will give me the total full amount that I paid, and that would be 297,000 plus 346,500, and it gives me a total of 643,500 when you punch it in your calculator. Now, this is the total that I paid. In this total that I paid, remember I also included March and April. So March and April will need to be subtracted because they do not belong to this financial year. So how do I get March and April? I'm going to remember that when March and April came around, my rent was already increased. So it means that for March and April, I was paying 57,750 per month. So it means now I'm minusing 57,750 times 2 representing March and April. So then this will give me my final answer. Now, transferring this calculation into my statement of comprehensive income, I have that total amount of rent that I have calculated at 643,500, and I'm going to minus 57,750 times 2. 57,750 times 2 in your calculator will give you a total of 115,500, and that is what I'm subtracting to represent those 2 months, and that will bring my rent expense to a total of 528,000. Our last line item is director's fees, which has been given to us in information A as 1,610,000, and we have also been given an adjustment in Roman figure 6, and it says provide for director's fees owed. The company's 2 directors, Brenda and Johan, have been employed since 2020. Brenda earns 10,000 per month more than Johan, but she has not been paid for February 2023 yet. That information tells you that Brenda has been paid for only 11 months. So that means that we are going to have to add Brenda's amount to this amount. Johan took an unpaid leave for the last 3 months of the financial year. Now, that also tells you that Johan has only been paid for 9 months out of the 12 months. But the difference with Johan is that we do not have to add her amount on this amount. Why? Because it is an unpaid leave. It is not an amount that we're supposed to be adding. Now you're wondering, why did they then give us that information? That information was simply just given to us to help us be able to calculate the amount that we need to give to Brenda, because remember, Brenda is being owed 1 month, and we have been told in our information that Brenda's fee is 10,000 more than Johan's. So that means that in one way or the other, we are going to have to figure out how much does Johan earn. So that's why the information about Johan is also important. So how do we calculate this amount? Now, in this figure, we are safely assuming that there is Johan's 9 months of pay and Brenda's 11 months of pay, including her increase. Now, we cannot just take this amount and divide it by 2. Why? Because in this amount, it doesn't represent an equal amount for both of them. Remember, Brenda earns 10,000 more, and also Brenda is being paid for 11, while Johan has been paid for 9. So it's not as simple as we can just take this amount and divide it by 2. We can also not just take this amount and divide it by 12 just because we are trying to figure out a monthly payment, because remember, they were not paid for a full 12 months, and even if they were paid for a full 12 months, they were not paid an equal pay. So we need to get this amount to a figure that we can easily divide it by a number of months. When it's like this, I cannot just divide it by a number of months, because if I'm dividing it by a number of months, then it says that I'm assuming that Johan and Brenda earns the same pay, but that is not the case. So what I need to do first to make sure that I can divide it by just a number of months that they have been paid for, I need to take out that increase that makes Brenda's pay more than Johan's. So I need to minus those 10,000. Those 10,000, how many of them are in this amount? Remember, these 10,000 belong to Brenda. Brenda was paid for 11 months. So I need to take out 10,000 rent, that is for 11 months. So after I take out this 10,000 rents, that is for 11 months, which gives me a total of 110,000, I am then left with an amount that represents an equal pay for both Brenda and Johan. And this amount can be easily now be divisible by the number of months that they have been paid for. So why is it divisible? It's because I have taken out that part of an increase. It means what is left in here is an equal pay for both directors. So now what I need to do is just to divide it by a number of months of the payments. Now, what is my number of months? Not 12, because remember, none of them was paid for 12 months. Brenda received a pay for 11 months and Johan received a pay for 9 months. So that is the number of months that I'm going to divide with. I'm going to divide it by 11, that represents Brenda, and a 9 that represents Johan. So that means I'm dealing with 1.5 million that is divided by 20 months in total. That is 11 plus 9. So that means that equally, when we are not including Brenda's increase of 10,000, they both earn 75,000. So which means that Johan earns 75,000, and if we are including the 10,000, then it means that Brenda earns 85,000. So what does this mean? It means now that in our statement of comprehensive income, we are going to take our amount that was given in we are going to take our amount that is given in information A. We are going to add 75,000, which is the amount they earn per month without an increase. But remember, this is a Brenda's salary, so Brenda's salary has an increment of 10,000, and that is what we are going to put in our information. So for my director's fee now in my answer book, I'm going to start with the amount that was given to me in information A, and I'm going to add 85,000. That is the amount that we owe to Brenda because we're supposed to be paying her. Why 85,000? It is the 75,000 that I have determined is the amount that they earn equally, and I have added to that 75,000 10,000 rands extra because they did tell us that Brenda earns 10,000 rands more, and that all totals to an amount of 1,695,000. Then finally, we are going to calculate our operating expenses. You will notice that for our operating expenses, they came and gave us all of the totals that we needed, including at the bottom for our taxes and our net profit, but they did not give us our operating expense. The first thing with the operating expense, I need to put bracket there to show that you remember and understand that it is an amount that is subtracted. Now, how am I going to add to get my operating expenses? Usually to get my operating expenses, I will have to add everything that is in this box, but now we have these three gray areas that shows us that there is a wages and salaries, a depreciation and an expense. We don't know those amounts, so it just tells you that those amounts are there, you just don't know them. So you cannot just add these three, because if you add this three, you would have excluded these three amounts, and that would mean this amount is wrong. So to get it, you will have to treat it like a balancing figure. Now you have your gross operating income, you also have your operating profit in the end. So to treat this as a balancing figure, you will take your gross operating income, which is 12,254,100, and you are going to subtract your operating profit, which is 4,150,300, and it is going to give you an operating expense of 8,103,800.